This is the Friday, April 6th, 2018 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Lanny.
Let's touch on cotton here before we get to some of our social media questions. Cotton gained 108 from last week in the May contract. How much more upside potential are producers expecting, or should producers expect, or should they be looking to make some sales?
The demand for cotton's been pretty good. Our exports have been pretty good there. I think there's some upside potential, but not a lot. I think if you go back up into that resistance area in that 83.50 to maybe up as high as 85, I think if you've got cotton you need to move, I think those would be the levels I'd look at to start, making sales or catching up on sales and whatever's the case.
Okay. Well, let's see. Let's jump over here into some social media questions because I know you wanted to make sure we talked a little bit of strategy here in Market Plus. Brian in Illinois would like to know what is a kind of strategy that a farmer needs to use with this type of volatility. And I know you mentioned you wanted to talk corn and soybeans, so let's take it from both perspectives.
I think the strategies, from my perspective, the strategies are different for the two. If you get up in that 1050 area on the November beans with the acreage we've got, with the carryout we've got, with a huge Brazilian crop, I think you just have to flat out make sales. However you feel forward contracting, futures, whatever works for you at 1050. My theory is that if you think there's a lot of upside in a market, you probably want to use options. If you don't think there's a lot, then you want to use actually getting sales made. Mm-hmm. So that's why on beans, I don't think there's a lot of upside, so I'm just getting them sold.
Okay.
On corn, I do think there's upside. I said on the show we could go up and test last year's highs at 428. If we get any weather thing going, that could, and acreage is actually in lower or as low as they think, we could test 450. So there's upside potential in corn when we're sitting down here in this 396 to 405 range. So if you want to make some sales, number one, I wouldn't be any big toot to get that done, but if you did, I'd probably look at maybe some kind of an option strategy, buying a 380, 390, $4 put, mm-hmm. something like that, and then seeing how the summer develops, whether you want to roll those up, if we do test those higher levels and make a sale and close out the option, or something like that.
Offset the position,
those are the two approaches I'd make. And then if you're a user of corn, I'd be buying corn here in this 396 to 390 range on basis to December contract, or I'd be buying, or if you need meal, buy meal down in that 370 range. So those are the two strategies for producers as well as for livestock people that need to, the end users, mm-hmm. I guess you'd say.
And I guess we didn't really talk about this too much during the regular market portion, but meal has still been relatively strong.
Oh yeah.
And that has been what has led the soybean rally here over the last couple of months, month and a half, 2 months. Will soy meal continue to pull soybeans up with it, or do you think they're...
Well, that's the question. How is that going to get worked out? Are Brazilian beans going to move their way into those? Because Brazil doesn't have that much processing. All the processing is in Argentina. So are Brazilian beans going to move into Argentina to be processed? And the other thing we need to keep in mind is the Argentine farmer came in with a pretty good supply of beans that they're sitting on, and they've been sitting on them and not selling them. Number one, because the price has been going up, but number two, it's a hedge against inflation. At some point, those Argentine farmer holding is going to start moving its way into the processor too. So I'm assuming once the Argentine processors start getting beans to process, we're already cranked up and doing as much as we can in mm-hmm. the U.S. The U.S. processors are running strong. Eventually, we're going to generate enough meal that it's going to be a problem in that meal market, and I don't know when that happens. Okay. Whether that's spring, summer, sometime it will get mm-hmm. worked out, but it may be a while, and that's why I'm sort of hedging my bets on the short run of buying that May soybean meal at 370.
Okay. Let's take another social media question here that impacts on soybeans. Lee in Mankato, Minnesota would like to know, will we see more small grain acre numbers in light of the Chinese tariffs in soybean acres? Or I'm sorry, yes, in light of the threats on soybeans.
Do you think we'll see more what?
Sorry, let me start that over for you. Will we see more small grain acre numbers In light of Chinese tariff threat of soybeans, there are two questions here from Lee, so I was kind of mixing them together.
I don't see a lot of shifting to small grains. I mean, if you get November beans up in that 1040 to 1050, why wouldn't you plant beans and just grow the heck out of them? Especially up where he's at. I mean, they grow good beans up there. If you can sell them for 1050, that to me works all day long. So I don't know. Especially if you've got financial problems and you're planting beans because you got financial problems. Why the heck wouldn't you be planting beans at 1050 or selling beans at 1050? Well, why would you even be horsing around? It looks like to me.
All right, I like it.
To be blunt.
Well, no, that's what we have you here for. His second question was, given the threat of reciprocal Chinese tariffs, will we see a decrease in soybean acres?
I don't think so. I think soybean acres is dependent on what happens this spring. If we keep this wet, cold weather and it persists, I think you have a shot at maybe corn acres shifting over to beans. There's another reason why I want to sell beans and hold off on corn, because if that persists another couple weeks and people can't get in, then I think, especially if bean prices hold up, you may see some shifting. So I don't see bean acres going down. If anything, I see them being solid to maybe up a little bit.
Okay, we had another social media question that came in talking about acre estimates, which of course was big discussion last week. Dan in Geneseo, Illinois would like to know, could the 1 million acres lost in last week's report be returning to CRP? In high commodity price years, we saw a lot of acres get pulled out of CRP and planted to row crops. Could this 1 million acres be returning to CRP? He wants to know again, with exclamation point.
I don't think so. I think, especially if you have a bounce in corn here in the next month, a lot of people, especially over in his neck of the woods, I think you got a shot at getting $4 cash for cash corn. Why wouldn't you plant corn as hard and fast as you could at those kind of prices? No, I don't think so.
Okay. Let's take a couple other social media questions. We appreciate you guys sending them in. You can always find us on social media at Market to Market on Twitter. You can find us on Instagram at IPTV Market, of course, on Facebook to send in those Twitter or Facebook or Instagram questions. Let's take a question here from the hog markets. Dave would like to know, what will it take to turn this hog market around? Is it possible the tariff issue will somehow overshadow the seasonality of the summer hog market?
Well, there's that potential. I guess I don't see that this tariff thing is going to have that great an impact on pork exports. What it's going to take is somebody's going to have to start losing money and stop producing hogs. I mean, that's what...
And China produces quite a bit of pork on their own, or don't necessarily pull from the U.S.
Correct. So it's, as long, I mean, if you're in north central Iowa and you're going to cross the street, you better look both ways or you're going to get run over by a cement truck. I mean, they're expanding like crazy up there. And until that stops, and that doesn't stop until somebody starts losing money. If you look at this hog and pig report, it looks like this expansion, it's not big, it's not huge, but it's steady, and it looks to me like it's going to continue. So until somebody loses money, I don't see it slowing down.
Okay. Tom, I think that's all the Twitter or Facebook and social media questions we're going to take tonight. Thank you so much for joining me.
Thank you.
Join us again next week when we dive back into the waters of world trade and the impact on rural America. And Angie Setzer will sit across from me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.